Hi guys, my name is Lindokuhle Bambelo, and I'm back again with another video. So on today's video, guys, like I said, that I was most definitely going to do a part 2 on how to find entries, but particularly on indices, which is US30 and NAS100. So on this video, that is what I will be showing you, and also how I caught a massive sell on US30, and also get to show you my own analysis on NAS100, since they kind of like move in the same way or structure. So yeah, guys, without any further waste of time, let me get straight to it. And I hope you did watch the initial video, which is the part 1 of how to find entries, but that involved like currencies. But this will be strictly be on US30 and your NAS100. So yeah. So without any further waste of time, I saw this low over here, this low, and as you can see that on the daily time frame, the market was trending to the downside. It's important to zoom out so that you can see the price movement quite clearly before you can take any decisions. So as you can see, first touch, second touch, and the third touch. Then on the bottom trend line, we've got the first touch, second, and the third touch. So you would also notice that we have some sort of a resistance level here, but it will be much more clear on the 4-hour time frame. So going down onto the 4-hour time frame, this is where everything becomes clear, right? So as you can see that, okay, like I said on the daily time frame, that we had our touches on the supporting trend line and the resisting trend line, right? So we had the first touch, second touch, and the third touch. And as you can see on the 4-hour time frame, the market is currently giving us or forming some sort of a bearish engulfing candle to actually confirm to us that the sellers are really indeed in this market and can still push the price furthermore to the downside. As you can see, this is a strong resistance level. So yeah, now having identified our zone and my pattern, because as you can see that if you can remember that after every impulse move, we get a correction. So hopefully our next impulse is most definitely going to be from that, after the close of that bearish engulfing candle, to the support level on the black line that I just highlighted here. So now dropping it to the 1-hour time frame, that is where things have become much more clear. Wait, come on. So yeah, as you can see, guys, like we had this corrective movement to the downside, then we have this touch over here. So impulse move, correction, and then that was a nice one on that resistance, because as you can see over there that we have this bearish engulfing candle, and then the sellers eventually did push the price to the downside. So if you were someone who was more like a swing trader or trading the 1-hour time frame on indices, you would have entered a sell. Yeah, because we're currently at a resistance, and then we have some sort of a double top type formation, which I explained on the previous video. And then you would see that impulse move, then we had this larger version of a correction. So hopefully this is where our next impulse is going to be. And another thing is the market. So when the market is trending to the upside, it forms, you can spot an uptrend by means of higher highs and higher lows. So higher highs and higher lows, something like this. So the touches on an uptrend that are at the top are called your higher highs. Then the touches that are below on an uptrending market are called higher lows. So if you look carefully here, the market was trending to the upside in a corrective manner. And then when it got there, it gave us a reversal, right? Because it was forming higher high, higher low, higher high, higher low, higher high, higher low. So that was our higher high, and then it came back for another higher high, and eventually went down. So where we are actually anticipating that maybe we're gonna get. All right. So as I was saying, guys, that okay, if you entered on the 1 hour time frame, you would have entered after the close of that bearish engulfing candle, then put your stop loss just above that resistance level, right? But because I normally or prefer to look for those intraday opportunities, I usually go to the, so my time frames for entry on US30 is 5 minutes time frame. And then sometimes the lowest I can go, which is the 1 minute time frame, depending on the structure, the zones and everything. So going now to the 15 minutes time frame, you would see that the market was correcting, which is it was moving correctively here. There were no clear movements is what was going to happen until it finally got there. So this is how I got my sells. So I had something like this corrective move to the upside, right? And then what happened on 1530, which is at market opening, the market opened with this bullish engulfing candle. But what I've learned is that, so because a lot of people are trading at 1530, which is when the New York stock market opens, there will always be that opening movement, and then there will be that movement that will follow after the market has opened. So if I did not enter a trade like on 1530 when the market opened, then I wait and see when the market reaches my levels. Then if I see the candlesticks that I'm looking for or what I'm looking for, then I enter based on the confirmations, not necessarily because of the time, the volatility and everything. I actually look at the structure of the market, but we all trade differently. Some people know why they enter immediately after 3:30 and everything like that. But for me, I saw that, okay, the market, if we're treating this as an impulse, then this was a perfect example of a corrective movement to the upside. And then considering the fact that we were at a strong resistance level, as you did see on the 1 hour and the 4 hour time frame, then I said I'm gonna wait for rejection candles there and then start looking for selling opportunities. But to be honest, I didn't think that the market was going to move that much bearish to the downside, right? But to show you how I actually got the entry that you see on the screenshot, I don't want to draw those levels and zones like I did, because it's going to look messy to somebody who does not know what's going on. So when I got the market, you can see on the screenshot that it was somewhere around about here. So like I said, that at market opening, the market opened with this bullish engulfing, actually that bullish candle to the upside. But I was not taken or lured by that movement. Instead, I saw that in terms of structure, I had my first touch. I had my first touch, second touch. So that was most definitely where I was going to get my third touch. So that is what I was expecting there, right? So that is what I actually waited for, right? I saw that first touch, second, then the third touch. So I saw that, okay, the market was now rejecting at that level. And then I had this line, which is where I put the stop loss just above that level, because I was actually waiting for the market to go to the downside, right? So at first, I saw that candle close, which is a pin bar, and then I'm entered immediately after that bearish engulfing candle. And then as you did see or still seeing on the screenshot, I put the selling opportunity to the downside, because I was actually waiting for the market to actually go to the downside. And they actually covered that 90% rule that I did tell you about on the previous videos. So if you did not watch the previous videos, please do check them out so that you can actually see how some of the things that I said in the previous video are still present and still do exist on this video too, and how will they continue be present in the market. So because it's more or less the same thing, but just different techniques or few tweaks there and there, right? So and then the market indeed gave us this nice bearish movement to the downside. It even break below and then went to the downside. So this is what actually happened. All right, so this is how I was able to, it was just my own personal understanding of how the market moves, which is after every impulse move, we get a correction. And then when you have a channel or a flag, which is a flag, it's a pattern that looks like this. At least a minimum of 3 touches is all that you need. So I saw that I have my first touch, my second touch. So I waited and said to myself, okay, this is most probably where the market was indeed going to give me my opportunity to sell. And I acted just on that. But I must say that I did close quite early. I think when the market was somewhere around about here, because I thought that it was changing direction, because the truth is we were still in this bullish trend, even though the market was trending to the downside. However, the market was still in a bullish trend. So what is important is not allowing the trade to go from a positive to a negative, right? So that is where the things of trailing stops and everything like that come from. It's better to just take what the market can give you sometimes instead of being greedy, and because anything can happen. And then when I started out, I started basically on currencies. So indices is something that I adopted or tried to looking at somewhere towards the end of last year. So I'm still learning about them, how they move, and actually something like that, because as I said on the previous video, that you would notice that most of the time it's like US30, because I dedicated the time when studying US30 and how it actually moves. So that is basically how I was able to get to this sell. But like I said, that I think I closed when it was somewhere around about here, because I thought it was changing direction, and then it eventually went to the downside and gave us, it even now broke the support level on the 90% rule, and it's most likely looking to sell even more further to the downside, right? So yeah, guys, this is basically how I find my entries, or how I found this entry on US30. It's just a pure clean structure, impulse move correction, then we have that impulsive move to the downside. Then as you can see on the 15-minute time frame, still the same thing, resistance, then we had the sellers pushing the price to the downside, and now we are below this level. So the market is most likely to continue going to the downside to actually give us what? So first touch, second, third, and maybe an anticipated fourth touch, somewhere around about there. Just to give you a tip, guys, sometimes you don't have to draw the trend lines and everything. Another way in which you can trade indices is from like zone to zones, which is having these lines, which is your significant areas where the market tends when it reaches or breaks that particular level, just to make things simple and clear. But that is also something that I will get to explain and show you as time goes by. But the overall outlook for now is that continuation of sales to the downside. So basically, yeah, guys, but moving on to NAS100. So it's actually more or less the same thing. As you can see, it covered the 90% rule and actually went to the downside, right? But I can start from the higher time frame so you can possibly see what actually happened. So NAS100 also had that low over there. Then we saw that the market was actually trending to the downside, which is by forming lower lows and lower highs. Then I had something like this. And then going to the 4-hour time frame, you would actually see that, okay, the market also has this sort of resistance. And then even at the current moment, we have that bearish engulfing candle to actually show that the sellers are still there and still actually going to push the price to the downside, right? To actually cover the 90% rule, because as you can see, the market has been moving in impulses, corrections, impulse move. So this may be a correction, then this is most likely where we're going to get our next impulse, right? So like I said, that everything becomes much more clear as you go to the lower time frames. So as you can see on NAS100 that we had this corrective movement over here. We had this corrective move over there, right? So if we're treating this as an impulse move, then this is where we got our correction. So this is most likely where we're gonna get our next impulse to the downside. And then because the market has sensitive areas, then this is most likely where the market can turn, because sometimes it may not necessarily go down to the point that it touches the support level. Not to say it won't, but sometimes that does not really happen or has to happen. So you just need to know what you're looking for, what is your target, and where you're gonna close. Because sometimes what is important is your exiting strategies. It may be easy for you to enter trades, but if you enter trades and end up allowing them to go into a negative, then that is not an effective way of trading, right? So another reason why we would have spotted maybe a selling opportunity is, as you can see, we had this smaller version of a head and shoulders over here. And if you would remember on the previous videos that I said, if we have a head and shoulders that looks like this, so one of the best head and shoulders is one where the right shoulder forms outside of the pattern. So that is something that has been working personally for me, which I'm basically sharing for you too. So those are some of the things that I look for in the market. So like I said that when I was explaining the candles as confirmations, or when I was explaining the thing about confluence, you would remember that I said if we have a pin by the resistance, then a bearish or bullish engulfing candle, then that is enough for me and for you too to actually enter a trade, because we would have got ourselves probably there, put the stop loss just there, and hope for the market to go as high as possible like that. So we're looking at something like 3%, 1:3 risk to reward ratio. Then hopefully the market is going to go to the downside, right? So if you're somebody who trade, like who's a swing trader who enters on 1 hour, 4 hour, then this could have been your entry, and there's still bearish momentum to the downside, because as you can see, the market rejected on that resistance. This is a bearish engulfing candle, so we're looking for the market to push the price to the downside. So now going to the 15-minute time frame, which is my time frames. So as you saw before I erased the analysis, that I had something like this. So I'm just going to delete this. And then if we can just erase this, because the most important thing, guys, is not to have many lines and everything in your charts, because it's going to confuse you and then you're going to make bad trading decisions. Because so as you can see, we had the support level, and then the market gave us exactly something similar to what I spotted on US30, right? So it was more like an impulse move, then the market corrected to the downside and then gave us our next impulse. So sometimes what is important is identifying where your next correction is going to be and where your next impulse is going to be, right? So as you can see, we had our first touch, second touch, and the third touch there, and then the market, even though it did not really give us a clear bearish engulfing candle, which is one of the candles that I normally look out for, but you would most definitely see that the likelihood was that the market was indeed going to go to the downside, right? Because we had, so the reasons why I would have entered is that we're at a bearish trend, which is I spotted on the daily time frame. As you can see on a larger version, this is also some sort of a head and shoulders, and then the market was moving an impulse move, so this was a correction, and then this is where we got our next impulse. But going to my entry time frame, which is basically the 5-minute time frame, you would see that, okay, like I said, first touch, second touch, and the third touch. And then you saw the market was giving us rejection candles, and eventually it pushed the price to the downside. But yeah, guys, I don't usually trade NAS100 because I don't really have the experience necessary. But sometimes I do feel like NAS100 like is easy to analyze because it moves clear, gives clear moves and everything like that. But it's important to stick to what you know and then level up and improve as you go, right? Maybe in the future, I will have the confidence and everything like that. But for now, it's US30 all the way. And then indeed, the market, if you would have entered a sell probably here on the 5-minute, then I would, to be honest, this is where my overall target would have been if I was trading NAS100 because of the 90% rule. And of course, unless if it broke this like it did, then this is where I would have got that next sell, which is the breakout retest type of entering a trade. Then you would have put the stop loss at least just above, and then we're looking at something like 5%. Like I said, the market also in NAS100, it opened with that bullish engulfing candle, and then one would have thought that the market was initially going to go to the upside. But all I can tell you, there is market opening, and then there is the actual movement. So that is what I noticed on the market, that it may open by selling, but you need to be smart and know what you're doing. Because probably when it reaches this support level, if maybe it opened as a sell, probably would have ended up as a buying opportunity, right? So I was not taken away or carried away by the fact that the market opened by buying and thought that maybe it was going to push the price to the upside. But I could see that, okay, it was in a corrective manner. So I just waited for my third touch today and then actually did. So yeah, guys, this is all I wanted to share with you today. I hope it helps you on your trading journey. Yeah, guys, make sure to check out the previous videos so for a better understanding and some of the terms or things that I just explained here. So please do me a favor, if you did enjoy and like this video, please like and hit the notification bell so that when I drop another video again, you're going to be the first to know. Yeah, thank you for watching, guys. See you in the next one.